Good Friday morning, you're live on CNBC. This is Inside India. I'm Dan Murphy. Let's get straight to your headlines at this hour. First up, China outlines its next 5-year plan, pledging to double down on tech self-reliance and domestic demand as Beijing concludes its fourth plenum. Plus, the White House confirming President Donald Trump will meet with China's leader Xi Jinping at the APEC gathering in South Korea next week as Trump kicks off his Asia trip in Malaysia. And India's Reliance Industries recalibrating its oil imports as energy majors in India and China reconsider their Russian oil purchases following Trump's latest sanctions. Welcome to the program. Let's bring it home with a live look at the Friday session now unfolding in Asia. And of course, the direction of travel here looking relatively mixed overall with a bias to the upside. The Nikkei 225 among the top gainers today, better by 1.35%. The Kospi in South Korea also up around 2%. And we're seeing decent gains for the SET index as well, better by 0.46 right now. Well, let's head straight up to Beijing, where China is holding a press conference to highlight some key themes and takeaways. Let's just listen into this if it's in English.
High-quality development and in comprehensively deepening reform and expanding high-standard opening up. Certainty in our own high-quality development is the best response to the uncertainty in the changing external environment. It is the key to seizing the strategic initiative in the intense international competition.
Okay, let's get some insight on what is exactly happening here. This is the Communist Party's post-plenum news conference. Our China reporter Elaine Yu joining us live now from Shanghai. She's been listening in and, of course, following all of the key developments. Elaine, walk us through what we know.
Hey, Dan. So China's Central Committee of the Chinese Communist Party has released the communique from its fourth plenum, mapping out the next 5-year plan for China. And the top priority is technological strength and tech self-reliance, as well as advanced manufacturing, innovation, and industrial upgrading, also high-quality growth. So these are very much continuing on and doubling down on the earlier goals of the previous 5-year plan. And this comes as no surprise given the geopolitical tensions around tech restrictions as well as sanctions from the West. And AI will be in focus for this next phase of China's tech-driven growth. Let's take a listen from the press conference on AI and China's plans around that.
Advance the Digital China Initiative. We will develop an integrated digital market that is open, shared by all, and safe, and deepen the integration of real economy and digital economy. We will accelerate digital innovation in such fields as AI, ensure effective supply of computing resources, algorithm, and data. We will fully implement the AI Plus action to empower different sectors in an all-around manner.
What is also new and notable from the communique about the fourth plenum and the 5-year plan is a reference to tackling overcapacity. Now, they didn't use this word exactly, but they said China must maintain a, quote, reasonable proportion of manufacturing. And Chinese analysts say that this is calling for China to move beyond that subsidy-heavy, industrial-heavy playbook of expanding capacity. And Morgan Stanley said this is putting innovation over involution, and this is something we'll have to track how well it does in bringing that capacity down and boosting domestic demand instead. Dan?
Elaine, you're also at the Bonn Summit. You spoke to a number of guests on the ground today. What are some of the key takeaways?
Yeah, the Bonn Summit, this is the second day, and people are flying in from Paris, Beijing, and D.C. and other cities to discuss tech and geopolitics or monetary policy. Now, has been overshadowed a bit by the U.S.-China trade talks that are taking place, resuming today in Malaysia. And that is also front of mind for a lot of participants here. And I got a chance to speak with several attendees about the U.S.-China trade talks, and they see this as a positive development despite the escalating tensions around tariffs, all the tax restrictions, rare earth restrictions that are creating all these tit-for-tat measures. They see the two sides working to bring down the heat, to pave the way for that meeting between President Trump and President Xi that was long mooted and long anticipated. They welcome this as a good sign, and they're hoping that the two sides will at least agree and work out the convoluted details of a trade agreement later on. But also a lot of attendees are looking at China's economic issues and growth model that is front of mind. And here I want to bring it back to some of the details from the fourth plenum about China's plans to boost domestic demand. And they say it will be a priority to really expand consumption. And the way China wants to go about this is through social welfare reforms and safety net service support. And this is not like bazooka stimulus or cash handouts. It's really about trying to improve people's livelihood. So we'll have to track how forcefully China tries to push forward this issue, and can expect perhaps a gradual working towards a bit of economic rebalancing in China. Dan?
Elaine, thank you. We'll come straight back out to you if there's any more breaking news. That's CNBC's Elaine Yu there, live on the ground in Shanghai. Let's push forward and give you a look at the Canadian dollar right now as well. Look at this. On the back foot after President Trump said that all negotiations with Canada have been terminated. Trump announcing that in a post on Truth Social in the last hour over an anti-tariff ad that Canada used that featured the former US President Ronald Reagan. The Indian market's coming online in about 45 minutes. Here's what GIFT Nifty futures are indicating right here, right now as well. Of course, all of this coming after we saw the Nifty 50 extending its rally, posting its sixth day of gains. This on hopes that US tariffs will be lowered from the steep 50% to a range of 15 to 16%. That according to a Mint report that CNBC has not independently verified. The benchmark index has gained nearly 10% so far this year. And of course, oil prices also in focus this week, edging lower in Asia trade after what we saw was a huge 5% spike overnight. Russia's President Vladimir Putin responding to these latest US sanctions on two of its largest oil companies, Lukoil and Rosneft. Putin saying Moscow's response will be, quote, serious and overwhelming. He also added that a sharp supply drop would hike prices and put cost pressures on global economies. Listen to this.
This is an attempt to escalate, but if these weapons are used to strike on Russia, the response will be very serious. I should even say overwhelming. Let them think about it.
Indian oil majors, including Reliance Industries, reportedly planning to halt imports of Russian oil. Shares of these companies all tracking lower, with a Reliance spokesperson announcing the, quote, recalibration of these imports to be fully aligned to the Indian government's guidelines. We'll see if it happens. Meanwhile, the Chinese oil majors also looking to pull back their Russian oil purchases. Remember, India and China are the biggest buyers of Russian crude. Well, let's get more insight on all of this now. CNBC TV 18's Sonal Bhutra joins us live now with the latest. Sonal, just walk us through the fallout so far.
Hey, Dan. Well, as you pointed out, India and China are the biggest consumers of oil when it comes to Russia. And just to give you some perspective, India imports around 34% of its total crude oil needs from Russia. And for that, the split looks like this. Private players like Reliance Industries, Nayara Energy, they directly import from Russia, while the state-owned oil refiners, the likes of Indian Oil, Bharat Petroleum, and Hindustan Petroleum, all of them do it via third parties. So the idea is that if they do actually halt imports from Russia because of these sanctions, there could be a direct hit to private refiners more than this state-owned refiners. As you pointed out, Reliance did indicate, this is as per a Reuters report, that they are recalibrating their imports coming in from Russia post these sanctions, and they are reviewing the documentation as well and in talks with the government as well. Additionally, also watch out for Narara Energy. It is not a listed stock, it is not a listed company, but it is the second largest private refinery in the country, where Rosneft holds around 49% stake. This company already saw big decline in imports and exports because of this direct connection that came in from Russia. And this company also indicated that they are in touch with the government to ensure that there are no bad effects of this sanction that has come by. As far as the state-owned refiners are concerned, we did speak with them. They are still reviewing the documentation, but earlier they had indicated that they are not going to stop any sort of imports coming in from Russia, but things have changed since yesterday, right? So we'll watch out for the commentary coming in from there. But for now, the indication is that documentation is being reviewed. There are calibrations with respect to halting the imports coming in from Russia as of now.
Okay, interesting to watch. And what are you hearing about how much of this has to do with trade? Of course, these latest measures from the White House also come as we see the US and India trying to hammer out some kind of mini trade deal before the end of the year that would ultimately result in lower tariffs. Is this the White House attempting to build leverage over those trade talks, Sonal?
Well, that's the indication, and that's the reason why you saw that surge in Indian markets yesterday as well, that if India does stop importing Russian crude, there could be a positive rub-off on trade negotiations as well. And we did get a word coming in from Piyush Goyal as well yesterday, the Commerce Minister. He did indicate that, yes, talks are underway, but there is no finality again. So that is something that continues to remain the big watching point from now on. What happens with the trade talks going forward? But yes, the indication is that if Russian imports are halted by the country, that is India, there could be some positive signs in the trade deal.
Okay, Sonal, watching closely. Thanks again for joining us today. We appreciate it. Up next on the program, we're live in Kuala Lumpur for the key ASEAN Summit. Our colleague JP Yong joins us live next. He's on standby with Malaysia's Sovereign Wealth Fund. Don't miss that exclusive conversation. Welcome back. Let's head back out to Beijing, where leaders from China's ruling Communist Party are now holding a press conference after the conclusion of the fourth plenum. Speaking now is the Chinese Minister of Science and Technology. Let's listen in.
And make AI an international public good that benefits all. We will work together to build a global AI governance system to meet global challenges together. Thank you.
You've been listening into a news conference with China's Science and Technology Minister saying that AI will be a key focus for Beijing moving forward. They're seeking to accelerate development and seeking breakthroughs as well. He also announced earlier that they'll be stepping up efforts on top-level design of AI. That includes developing chips with high-level resources to strengthen AI governance, also adding there that China wants to work to make AI an international public good. If there's any more news lines coming out of that news conference, we will, of course, come straight back out to that live event. Meanwhile, the White House has confirmed that US President Donald Trump will meet his Chinese counterpart on the sidelines of the APEC summit next week. His Asia tour starts in Malaysia this weekend, followed by Japan and South Korea. His face-to-face meeting with Xi is set for next Thursday morning, but we're still waiting on Beijing's confirmation. Let's head out to Malaysia for the upcoming 47th ASEAN Summit, which includes a list of high-profile attendees and global leaders this year. Our Southeast Asia reporter JP Ong is live in KL with a special guest. Hi, JP.
Good morning, Dan. And you're right, the energy in Kuala Lumpur, Malaysia, has been ramping up. You can tell from the noise in the hallways and the sidelines of the MasterCard ASEAN Inclusive Growth Summit actually here. And again, all of this leading up to the much anticipated arrival of U.S. President Donald Trump over the weekend, where he will take part in the Leaders Summit actually and discuss things. But of course, the real shadow is the ongoing uncertainty with regards to rising U.S.-China trade tensions and that trade war that seems to escalate and develop almost on a weekly basis. That's kept a lot of groups and a lot of countries in Southeast Asia, which count both the U.S. and China as their biggest trading partners, on their toes for the better part of this entire year. And that includes investment groups like Khazanah Nasional, which is the sovereign wealth fund of Malaysia, actually, and how this is actually shaping their own initiatives and their own mandates to both drive growth in Malaysia, maximize portfolio returns, and also support areas of interest is going to be important. Remember, Malaysia is trying to make ambitious strides into moving up the semiconductor value chain. And again, all of these trade uncertainties is also casting a cloud on that industrial master plan that they launched. Well, let's talk to Khazanah Nasional CEO, who actually joins us now on the sidelines of the ASEAN Inclusive Growth Summit. Faisal Wan Zahir, who is the CEO of Khazanah, now is with us to talk about how this is coloring or perhaps helping them repivot, if it is, their own investment outlook. Mr. Zahir, thank you so much for joining us today. Again, there's a lot of uncertainty, and of course, whenever there's uncertainty, it's a big question that many viewers want to ask about is how groups like Khazanah are managing risk and their investment profiles. Has this perhaps caused Khazanah to perhaps be more scrutinous with regards to risk management? Because again, there's a lot of risks out there and a lot of uncertainties that are, to be honest, also outside of your control. How is this influencing their discussions about risk and also investment flows right now?
Well, thanks for having me. I think when we actually look at it, we're kind of like in a state of flux, because what's happening here is that we're seeing a reconfiguration of trade globally. And when previously, all the countries were looking about free trade, now it's slightly different about fair trade, where countries are trying to internalize their production as well as consumption. So that changes everything. Now, as far as investment is concerned, I think there's a couple of things. Now, for us, we look at international investments, but we also have investments which try to impact the country as well. Now, I'll try to go through that. Now, first of all, international investments, it is about diversifying risk, and which we are doing, and we're trying to make sure that we have enough allocations widely spread to diversify the risk. Now, for Malaysia and for ASEAN, what is interesting here is what is the differential between the tariffs between countries or between blocs where it's competing for the U.S. market. And let me explain to you, WTO, when China came in, a lot of supply which came from ASEAN to the U.S. has actually gone back to China. So what we're looking at here is really looking at the differential between the tariffs in ASEAN countries versus the Chinese tariff. And if there's sufficient differential, so in other words, it's actually advantageous for ASEAN. Now, yes, we have to look at the monetary policy. It has to have an impact on currency, but on a net basis, post-FX, the differential is still there. So this is something that we're actually pretty excited about. ASEAN is high growth region, 4.5% GDP growth. And you have this potential going forward where, potentially you could look at the manufacturing sector, even semiconductor sector, but because of that differential, you're finding new markets. Now, there are some derailers, of course, that we have to watch out. Transshipment, ASEAN labeling, or ASEAN washing, or whatever you want to call that. And those are the things that we need to take into account. But I think in general, we do see it's diversifying risk, but really looking at the details and see who are the winners and losers.
Right. And you mentioned semiconductors there, because as we know, as Malaysia launched that very ambitious industrial master plan to leverage your expertise in packaging to move up the semiconductor value chain. The plan itself is quite credible and quite impressive, actually. But again, because we have the advent of the potential tariffs on semiconductors that the American president floated a number of times in the last couple of months, does that cast an unwanted cloud on the ambitions of Malaysia to move up the semiconductor value chain, especially since Khazanah is taking an active role in investing in these efforts to try and modernize and move yourself up? And this could be, and also because this could be a once-in-a-lifetime opportunity for Malaysia to do it.
Yeah, that's true. I think as far as that segment is concerned, it's the uncertainty. It's not something which, once that's stabilized, I think we should be able to move forward. Now, again, we look at differential in terms of tariffs. And in the E segment, you do have sufficient headroom, even if you look at the strengthening of the ringgit, where there is that differential. Now, what the country such as Malaysia has to do is to take this opportunity and move up the value chain and increase that complexity. What is the complementary? So it's an opportunity to innovate, an opportunity to actually have more people in the country to come and invest in this area. But the supply chain for semiconductor, it's not something that you can change overnight. So I see it more as an opportunity for the national industrial master plan and
so even in the worst case scenario where you have 100% tariff perhaps levied on semiconductors, which again nobody wants, but if it does happen, does that suddenly cause pause or perhaps slow down significantly these efforts? Because as you mentioned, there is a window, but that window could close even faster if that happens.
That is true. I think the question here is, if you put something like 100%, what happens to the whole sector? The whole semiconductor industry globally, that has an issue there. But having said that, I think we do want to look at the differential between countries that are competing, and that's something that to look at more closely, rather than a theoretical scenario of 100%.
Right. Let's talk about other sectors that Khazanah has been actually targeting. And as we mentioned, Khazanah's mandate is to make sure you can maximize shareholder portfolio returns while also supporting some of the growth areas of national interest for Malaysia, and among them is power. There are investments in an ASEAN power grid, and that seems to align with some of Khazanah's own investment objectives at the moment. Where do you see this power grid in ASEAN, and how is that perhaps aligning with some of the investments that Khazanah has made on its own already?
When we look at the sector, we have a cluster called energy transition, and the idea there is how can we decarbonize cities and industrial parks, and of course it comes from the source of energy itself. And when you want to come from and have more renewable energy, what you do need is a more resilient grid. Now, countries can't look at their own areas, their own country on its own. When you look about RE going forward, you do need to stay connected and to build that resilience. A bit like Europe. It's across Europe where you have that network connectivity. In ASEAN, it's different. We have multiple islands split across seas, etc. So this is an area where, for all countries to be able to transition to a low carbon economy, we do need to stay connected. So something like the ASEAN Power Grid is something within our which we know our portfolio company is focused on. We'd like to see that happen.
So the potential to transform ASEAN is there, but what kind of returns do you think are there? What kind of economic upside is there for Khazanah if you continue to invest in an ASEAN power grid that we hope comes to reality?
Well, first of all, I think the test is, of course, whether people are willing to pay for low carbon emission energy. And so far, I think there's the corporate access to the grid for corporate. And that's been working well. And we are seeing that manufacturers are actually willing to pay a slight premium. Energy is actually quite low still in Malaysia. So having a premium for low carbon energy or renewable energy is something that we are seeing people willing to pay. And we have a company called UM Lesser, which is underneath us, and more solar parks are being done just based on this economics here.
All right, first of all, I can't let you go without asking you about this topic because it's what's been the newest flashpoint with regards to the U.S.-China trade war, and that's rare earths. Now, there's been a lot of talk about Malaysia perhaps taking a more active role in the global rare earth sector, especially with talks now and claims and reports that Kazana is in talks with Chinese producers to perhaps adopt technology for rare earths processing. You know, there are a lot of reports out there. I'd rather ask it from you yourself. I mean, is Kazana in talks right now, and is this a possibility that we might see Chinese investments into rare earths here, and not just in terms of setting up processing facilities, but actually perhaps adopting the technology in Malaysia? Can you confirm that, sir?
Well, first of all, let me explain our approach. I think it's better to explain how we actually think about this. And again, when we look at the semiconductor sector, you know, one of the strengths of our ecosystem is actually power management chips. And these are chips for auto. We have an auto industry. And that's an area where if we can find areas which complement that ecosystem, whether it's magnets, whether it's RE supply, that creates a more fuller ecosystem. That's how we approach this. So obviously, I think as a country, we're open to collaborate with everyone. We're open for all. But what would be seeking would be those who have the expertise and the whole ecosystem that can support the semiconductor ecosystem here in Malaysia.
And because of the discoveries of rare earths at the moment, is there a possibility that this will, how important is that to support that broader ecosystem, that Malaysia has a broader and more significant rare earth footprint perhaps?
First of all, it's a blessing. It's basically nature's blessing where we do have that reserve. And there's still a lot more to do, which is basically environmental impact and understanding the regulatory framework. Mm-hmm. And I think for something like this, since it's there, I think it's useful to actually see how we can actually make use of it so we can add value in country rather than export it more.
And it seems like a lot of steps in a multi-year journey perhaps towards rare earths prominence actually for Malaysia. But we'll see. It'll be exciting to see how Malaysia navigates and how quickly they can navigate that. Professor Wan Zahir, CEO for Kazana, thank you so much for joining us today on the silence of the ASEAN Inclusive Growth Summit here in Kuala Lumpur, Malaysia. And again, thank you for your insights and your candid answers with regards to Malaysia and its possible role in rare earths. There you have it, Dan. A lot of insights and a lot of interesting things with regards to Malaysia's own efforts to move up the value chain both in semiconductors and rare earths against the backdrop of these trade uncertainties. For now, it's back to you, though, and a good morning, Dan.
Good morning to you, JP. Thanks for bringing us that conversation. Up next on the program, we'll look into the wealth management space in India. A new wealth firm says it wants to democratize wealth, not just cater to the ultra-rich. We're speaking with Vikas Sattajia of Shriram Wealth on the other side of this. Stay with us. Welcome back. This is Inside India. Some other stories we're keeping tabs on today. First off, US President Donald Trump dismissing several Israeli lawmakers' efforts to annex the West Bank, echoing similar comments made by Vice President J.D. Vance during his recent visit. It comes after a bill which applied Israeli law to the West Bank won approval on Wednesday. Here's President Trump speaking earlier.
The West Bank is, don't worry about the West Bank. Israel's not going to do anything with the West Bank, okay? Don't worry about it. Is that your question? They're not going to do anything with the West Bank. Don't worry about it. Israel's doing very well. They're not going to do anything with it.
Meantime, Trump also addressing the ongoing US government shutdown, which has now become the second longest federal funding lapse in US history. Speaking at a White House event, he said that a wealthy private donor has provided the US government with $130 million, which would be used to fund the US military, but declined to name that person.
He called us the other day and he said, I'd like to contribute any shortfall you have because of the Democrat shutdown. I'd like to personally contribute any shortfall you have with the military, because I love the military and I love the country, and any shortfall, if there's a shortfall, I'll contribute it. And today he sent us a check for $130 million. I would love to tell you he doesn't really want the recognition, if you want to know the truth, but he gave us a check for $130 million, which was sort of a shortfall, yeah. And that's going to go to the military, yeah.
Meantime, President Trump has pardoned convicted Binance founder Changpeng Zhao, who had previously pled guilty to enabling money laundering while heading the cryptocurrency exchange. In a statement released on Thursday, the White House reiterated the Trump administration's support for crypto, labeling the full and unconditional pardon as a move to boost the crypto industry. CZ expressed his gratitude in a post on X, vowing to, quote, help make America the capital of crypto. The Trump family's own crypto venture has generated about $4.5 billion since the 2024 election and was reportedly helped by an under-the-radar trading platform administered by Binance. Here's more of what Trump said.
I don't know. He was recommended by a lot of people. A lot of people say that, are you talking about the crypto person? A lot of people say that he wasn't guilty of anything. He served 4 months in jail, and they say that he was not guilty of anything, that what he did, well, you don't know much about crypto. You know nothing about nothing. You're fake news. But let me just tell you that he was somebody that, as I was told, I don't know him. I don't believe I've ever met him. But I've been told by a lot of support. He had a lot of support. And they said that what he did is not even a crime. It wasn't a crime, that he was persecuted by the Biden administration. And so I gave him a pardon at the request of a lot of very good people.
A quick check on the cryptocurrency space for you in the aftermath of that really significant news for this industry. You can see here Bitcoin down just on the flat line at 110,000 US dollars. We're looking at the other majors here, relatively mixed. And in the commodity space, oil and gold also looking like this. Oil, an interesting one to watch, now on track for its strongest week in nearly 5 months. Crude tracking near a 2-week high on fresh US sanctions against Russian suppliers. We have seen some give back in the Asia trading day though. WTI 61.43 down by 0.6. Brent also tracking at 65 US dollars a barrel. Well, overnight, the Indian oil majors, including Reliance Industries, reportedly plan to halt imports of Russian oil. Shares of these companies all tracking lower, with a Reliance spokesperson announcing the, quote, recalibration of these imports to be fully aligned with the Indian government's guidelines. Chinese oil majors also suspending Russian oil purchases, according to Reuters. India and China are the biggest buyers of Russian crude, and this has been one of the main pain points in trade talks between New Delhi and Washington, D.C. So plenty of fallout expected from this pressure on Moscow and, by extension, Beijing and New Delhi. CNBC's Sylvia Amaro caught up with the US ambassador to the European Union and started by asking if the fresh measures on Russia's oil industry are coming from a place of frustration at the White House. Listen.
The President Trump has been adamant that he wants to see this war end. Not only this war, but these many other wars and conflicts that he's ended. This is something that's very near and dear to him and very important to him. And you'd have to say that Vladimir Putin was not particularly responsive to his peace efforts over the past couple of weeks, which I think would be very disappointing to the president. The president's a very experienced negotiator. He's not going to get discouraged. But when you see that negotiations aren't going the way you want them to go, you need to ramp up the pressure. And I think with the 19th package coming out of the EU, almost simultaneously with Secretary Besant increasing the sanctions, I think these are the first times we've imposed sanctions under President Trump. And they're extensive on Rosneft and Lukoil. And I think it's an indication that we need to step it up. We're willing to step it up. And hopefully Vladimir Putin will get the message and understand that the war needs to come to an end. He doesn't seem to have gotten that message yet, but hopefully this will bring it home.
So if he doesn't understand the message from the United States, are you prepared to do even more?
I assume that we would do more. You're not going to see, I don't think you're going to see American troops in Ukraine anytime soon, if at all. But I think that the president will continue to ramp up the pressure until Russia realizes this war is not in its best interest. I think most of the indications coming out of Russia are that people are lined up at gas stations, the economy is not doing well, inflation is out of control. They've got support from the Chinese, which is unfortunate. I think if they didn't have that support, we'd be a lot closer to a resolution. I wish the Chinese would stop that. But I think the United States and Europe will continue to ramp up pressure until the Russians realize that the war is no longer something that is going very well for them. They seem to be at a stalemate on the battlefield, and but the Russians continue to pour money into this and arms into this and lives into this, their own people. At some point that needs to come to an end, and hopefully these sanctions will bring home the fact that it's time.
We shall find out when the meeting takes place. In the meantime, I would like to understand whether there was coordination between the U.S. and the EU with this latest move on sanctions.
I don't know if there was. I wasn't involved in it. I did see that President von der Leyen came out very shortly after Secretary Besant's announcement, and that Secretary Besant had given her a heads up, and that she came out and was supportive. So I think that's all very positive. But the extent of the inner workings before that would have been between Treasury and the Commission directly.
Well, we're going to head back out to Beijing now, where leaders from China's ruling Communist Party are continuing to hold that news conference after the conclusion of the fourth plenum. Just wanted to bring you across some fresh news that we're hearing from China's Commerce Minister, in particular on FDI, adding that China will further lower market access barriers to foreign investors, and also on the issue of U.S. trade ties, of course, very closely watched. He said that dialogue and cooperation are only the right choice, adding further that the US and China can find a solution and a correct way of coexistence. So we're going to be continuing to follow this for you. Once again, the Chinese Commerce Minister speaking just a short time ago at the news conference on the ground there in Beijing, talking about the US relationship as we track into this quite closely watched and, of course, critical meeting between President Xi Jinping and President Trump next week. Staying on trade and India and the European Union strengthening bilateral ties, it comes as India's Commerce and Industry Minister Piyush Goyal held a meeting with Germany's Federal Minister of Economy and Energy in Berlin. The two sides speaking about deeper cooperation in trade, technology and investments, among other key areas. They also discussed a potential India-EU FTA after those talks resumed back in June of 2022. Meanwhile, we're also counting down to the market open in India. Here's how we're shaping up right here, right now as well. Market trading getting underway in just a short while. You can see Nifty futures are at 26,000. The Nifty last traded 25,935. So we are expecting markets to open a little stronger there. Well, Japan's biggest lender, MUFG, is reportedly in advanced talks to buy a 20% stake in Shriram Finance for about $2.6 billion. It comes amid a wave of global capital moving into the Indian banking space. Sumitomo Mitsui's recent bet on Yes Bank and Emirates NBD's $3 billion deal in RBL Bank. Both MUFG and Shriram Finance have declined to comment so far, with Shriram previously calling earlier reports of a majority stake sale, quote, speculation. The report pushing shares up almost 14% this month, though, so of course it does warrant some consideration. As you can see here, last traded up by about 0.2%. Of course, Shriram Finance is part of the bigger Shriram Group, which launched a wealth management arm earlier this year through a 50-50 JV with South Africa's Sanlam Group. Shriram Wealth is targeting about $6 billion in assets under advice over the next 5 years, with a big focus of expanding into India's Tier 2 and 3 cities as it tries to capture the mass affluent market. Well, joining us now is Vikas Satija. He's MD and CEO of Shriram Wealth, here to unpack the strategy and also respond to this latest reporting. Vikas, welcome to the program. Thank you so much for being here today. So first of all, I know it's fair to say that Shriram Finance has publicly dismissed these reports of a 20% stake sale to MUFG. Previously, the business has called this rumor and speculation. But can you clarify this for us? Is the company in talks with MUFG?
We had already given a statement live, so that you've already got the statement. I won't be the right spokesperson at the moment to even talk about it. But this statement is clearly out that at the moment there is nothing as such talks going out in the market.
Given MUFG's history of strategic investments in Asia, and I'm sure you know about them, do you see long-term synergies if such a deal were to materialize, even hypothetically? I note the statement. You've also recognized that just a moment ago, but would this make strategic sense?
And it's not in my purview to be able to talk about this. I think at a group level, at the right time, the strategy discussions will happen, but at the moment, there is no such discussions which are happening.
Okay, well, let's pivot our focus then, and I appreciate you responding to that report. Of course, you're focusing on what you've called small towns in India demanding professional wealth services. So I want to understand exactly what that means. What would you classify as a small town or a Tier 2 or Tier 3 city in India today?
Any city which has a population less than 5 million is what we call as a Tier 2 city in India as far as concerned. So Tier 2, Tier 3 city is a big focus area for us as far as we are concerned, because we clearly believe that as wealth gets more and more coming into the shape, you will get a lot of money flowing into these cities with business owners, small-time entrepreneurs, shop owners, with Viksit Bharat looking at next 20 years to build at least 35 trillion economy as far as India is concerned. I think clearly you will see a lot of wealth getting generated here, and that's our target as far as we go forward and take forward to that.
And of course, wealth management is already quite a crowded space in India. We've seen a number of players attempting to capture the market that you are also seeking to capture. So what is the strategy and what's the point of difference?
See, Dan, I think if you look at the statistics as far as India is concerned, currently there is $1.2 trillion which is being managed. Only 15% of the wealth in India is getting managed by the professionals. Whereas when you compare it with the developed markets where you guys are sitting, I think it's close to 60 to 70% which gets managed. So from that scope itself, there's a huge scope for India to grow and get to manage that kind of wealth which will come in. If I look at the estimated numbers over the next 2 decades, this $1.2 trillion would be anywhere close to $10 trillion. So huge scope, both on the professional management side growing and as well as the entire market overall, the space growing as far as India is concerned. So that's the opportunity which one sees at.
Okay, and it's interesting as well because this comes as we see quite significant macro tailwinds in India as well. Is that also something that you're tapping into with regards to the timing of this announcement?
The whole idea of timing this announcement was very clear. The industry is growing and exploding. So there's enough opportunity for professional wealth management to take care and take it specifically to tier 2 and tier 3 cities. And when I say tier 2, tier 3 cities, the idea is because there is huge number of people who are growing and graduating into next levels, and they need professional wealth management. And that is where we play a role by making it sure that we offer them all the services under one umbrella and take care of the services for them.
And you mentioned earlier that only 15% of India's wealth is formally managed. That's a really interesting statistic and obviously validates the business case for you as well. So expand on that for me. How do you actually plan to bridge that gap? Because, again, there's a very low representation here. What particular products or services are you going to be rolling out first that you think will probably resonate best with the brackets that you're attempting to capture?
Our focus is very simple. We are looking at the affluent HNI and the ultra HNI segments to cater to. Keeping that in mind, which is $100,000 plus as far as the segmentation goes, what we have offered today is our entire offering is built on 5 pillars, which is wealth management, which is lending solutions, which is global opportunities, which is estate planning, and taking care of the protection needs. So these are the 5 pillars on which we have built in to make sure that from an investor point of view, there are everything available under one house, and one can come and cater to that from a professional management point of view. Even if you look at from a tier 2, tier 3 cities, as last 5 years data suggests us, if you look at only assets under management under mutual fund, it's from 25%, the same data has moved to 35%. Our sense is that this data over the next 5 years, you will see it around 45-50%. So not that the major cities will not grow, but tier 2 and tier 3 will start contributing and get into a larger space as far as this is concerned.
And what type of response have you seen so far?
It's been a fantastic response. It's just been 4 months for us since we formally launched here. We are today available in 11 cities. We are moving this over the next 5 years. Our target is to be in 50 cities across the country. As you rightly mentioned at the starting of the conversation, we are looking at close to 50,000 crores of assets to be built over the next 5 years. So yeah, it's been a great journey for us till now, and we expect this to taking its shape better and bigger as we move ahead.
Right, so $6 billion in assets under advice within the next 5 years. That's a huge goal. I'm curious how you get there as well, of course, because at the same time, as I mentioned before, still a lot of competition in this space. And at the same time, the competition on cost also rising as well.
So I think the idea is very, very simple. There's a huge scope as far as the industry growth is concerned. So you have to make sure that you right in the industry, work more on solutions than products. So our story is very simple. We want to provide solutions to clients rather than being a product pusher. So very clearly, we are focusing that how do we cater to the solutions of the clients. And I think, as I mentioned initially, there is a huge scope in the industry with the way India is growing. So India's story is very strong, and we are bullish on the same parameters to look at that we'll be able to get into professional management in a big way.
Vikas, also wanted to ask you about the broader fundamentals in India as well. You know, of course, on CNBC, we spent a lot of time talking about the dynamics of the market. India has been such an interesting story over the last couple of years, but at the same time as well, valuations not necessarily matching the corporate earnings profile that we see within this market right now, and that has led to some international investor concern. I'm curious just to get your take on the current state of the market today. So walk me through how you're reading market sentiment and direction right now, particularly as we track into the rest of the year.
There would be certain sectors which might be overvalued at the moment. But if you look at overall from an Indian point of view, I think there is enough scope to go. Anything which is to do with consumer discretionary is where we believe that there's going to be a huge growth. Anything related to agri side is another area which we are very bullish on. So I think markets will have and make its own way at different points of time. Yeah, one may say it's stretched at the moment, but I think the corporate earnings are pretty strong, and we are very, very bullish that over a period of time, you'll keep seeing India's story being going from strength to strength from this point of view.
It's interesting because right now it seems as if India has been in President Trump's crosshairs, not just with regards to these tariffs, which are hugely significant, but also more recently on the oil trade as well. India remains a large buyer of Russian crude. We've just seen these fresh US sanctions hitting those Russian energy producers. So, Vikas, what's your take on this as well? And with regards to the trade headlines, are you encouraged by what you're hearing about a potential near-term deal?
I'm sure that the two countries, which are the largest democracies in the world, would obviously come together, sit and come to a conclusion. And the Indian government is working on it. So I'm sure that we will have a consensus to look forward and take it forward from here.
How exposed are Indian portfolios right now to oil shocks, though? Huge volatility in crude only in the last couple of hours off the back of these fresh sanctions. And of course, the concern on the ground in India right now is that policy doesn't match production. So what's your take on that?
Let me put it like this. Oil prices at the current levels is pretty comfortable for India. I don't see a problem with that. Till the time the oil prices keeps below a $70 mark, I think we are pretty comfortable. And keeping that view, I think we are very, very bullish. And we clearly believe that from an investor's point of view, long-term story is still intact. So one need not worry about it. Continue with the long-term portfolio. Yeah, there would be in between blips here and there. Look at the scenario this year. You had FIIs as net pullouts as far as India is concerned. But there is enough money on the domestic side, which had made sure that markets are better than when we started the year.
Right. And just final question before I let you go, Vikas. Of course, you are establishing this wealth management business. You're seeking to onboard clients. You're looking to grow assets under administration as well. What would you say is the biggest barrier right now at a macro and market level for India when it comes to attracting foreign investor interest? Of course, we talk a lot about what's happening within domestic investment flows, but for the foreign investor, what do you think is holding them back?
I think if you put it simply, at the moment, the current tariff bit has been some bit question mark, which is where investors are looking at and waiting and watching what looks to be looked at. But India's story is very, very strong, which is why you've seen that over last 5 years, the kind of flows we've received has been phenomenal. When I keep talking to my friends, whether sitting out of Singapore, whether in New York, everybody is wanting to take higher pie of India. So clearly, I think from a growth trajectory point of view, you will start seeing monies flowing in at the right opportune time, again, back into this year. And clearly, there would be certain sectors which will get benefited more than the others.
Okay, Vikas, we'll leave it there. Appreciate the conversation. Thanks for coming on today. That's Vikas Satija from Shriram Wealth. Up next on the program, markets now online in Mumbai. We're going to bring you the opening trades when we come back. Stay with us. You're watching CNBC. Welcome back. Indian markets coming online. The Nifty 50 looking like this and set to round out the week on a positive note here. You can see here we have just seen the Nifty dipping below the flat line, 25,877. Hey, I spoke too soon. Anyway, down by 0.04% right now. Also the rupee at 87.80 at the moment. Take a look at some of the movers in the Indian markets today as well. We've been tracking the Indian oil majors, of course. Reliance Industries in focus. It now plans to halt or recalibrate its imports of Russian oil. Let's see if that happens. You can see across the board, those names are down, including Reliance, off by 0.12%. In the pharma space, Cipla and Eli Lilly announcing a deal which would allow the Indian drug maker to sell Lilly's popular weight loss drug under a separate brand domestically under the name Europeak. We're seeing shares down 2.8% despite that news. And the Indian cryptocurrency exchange WazirX set to restart operations today after a 15-month hiatus. The company recovered from a cyber attack that caused a loss of $234 million back in July last year. We're going to be keeping an eye on developments in that space as well. And we're on earnings watch. The Indian consumer giant Hindustan Unilever reporting almost a 5% drop in profit after tax. This was before India Prime Minister Narendra Modi's tax cuts kicked in. Shares rose 3% post-results. You can see stocks now down. The stock is now down 3.8%. Well, that wraps up this edition of Inside India. I'm Dan Murphy here in Dubai. Thanks so much for watching today. Do stay with us on CNBC. Access Middle East is coming up next.